Hello and what's up everyone? I hope you all are having a great time and today's video will add more to the great times. So before getting into the topic, I need to read this disclaimer. Everything I say is for entertainment purpose and entertainment purpose only. Nothing I say is any sort of any financial advice or any advice of any sort. Historical data doesn't guarantee future results. Always consult your financial advisor before investing and trading. So with that being said, let's move to the video. So yeah, today I will be covering everything one needs to know about volume analysis and how to mix it with your trading models. I won't be sharing the strategies that will come in the later part, but one needs to know how to read the volume and what's the importance of volume. So let's get into the video. So reading volume. Before we jump into the abyss of volume is a very vast topic and it needs a lot of focus and mix of a lot of things. So, and it can get overwhelmed. So before getting into this, ask yourself, are you comfortable reading price and time? In this previous videos, in this course, I talked about like price and time, the two-dimensional, like on the x-axis it's time and on the y-axis it's the price. So it's just two-dimensional. So are you comfortable reading that? Only if the answer is yes, you should be focused more on the volume. Because like if you aren't comfortable with the two things, adding another layer on it will complicate it more further. So if the answer is yes, let's dive in. So price and time is two-dimensional. So you can see in this price and time opens here and high is here. Just simple old days, like only get the open price and the closing price. Open price and the closing price. Just simple as that. Then we further refined it as open, low, high and close. Open, low, high and close. Open, high, low and close. Like this added like the it added more things. Like before we just had open and close. Now high and low. Now we have open and close prices too. So that's how most of the things are right now. But like we further complicated it by marking by the time, like every 5 minutes candle will plot open, low, high, close. So that made a whole new perspective of how to read the charts. And yeah, we have like so many strategies on the two-dimensional thing. Now if we go further, now we add volume, it becomes three-dimensional. Three-dimensional as in like three-dimensional, like on x-axis we are just reading something, and on if we add volume it's just making everything 3D, like every candle has a new perspective on its own right now. So it will complicate things. So I will try to explain everything about volume without complicating it. So let's get into it. This might look complicated. Let's simplify it with examples. I will use example. So, okay, one at a time, like volume, price, and time are like three different things. Let's keep one thing constant and see how the results are. So if we just look at price and volume, so like price is up, volume, like if volume are constant and time is constant, so your price is varying. So it's like same volume, price are expanded more. Same volume, price are expanded less. So this is a possibility. So let's discuss the same thing. Volume is same, price expanded. Volume is same, price expanded less. Volume is less, price expanded a lot. And volume is a lot and price expanded the same thing. So likewise, volume is super high, price is not expanding, it's concentrated. Volume is low and price is expanding. So these are various situations, and you can call them inefficiencies. This is what we are looking for. So when volume is high and the price is concentrated, one can look at it as a highly concentrated area and can call it absorption. Likewise, when volume is way too low and price is expanding, means like there is less interest and we are trying to find a new value. That's where a trend starts. So this is one way of looking volume. We kept two things, like we kept the time constant over here. Now let's move to the another one. So volume and time with price constant. So like price is moving the same. So like every candle is moving, let's say like 100 points. So volume and time. Like time is same, but only a little volume has happened. Time is same, a lot of volume has happened. So this shows interest, like how many people or like how many contracts or how many buys and sells are happening in certain period of time. So like more volume and less time is like more contracts being traded. So let's see all the possible cases over here. Like we discussed this same thing. It's taking a lot of time and very less volume. It shows there is a lack of interest. So like very little time and a lot of contracts are there. So we show like high volume. So like people are heavily interested. Less time, less volume. More time, more volume. Like this is a constant. This will, you can see it in jobs and stuff. Here you can see like taking too long and volume is less. You can expect a chop over here. It's like no trend, no consolidation, just chop. Like price is just eating up. People aren't interested. They don't know what to do, what to expect. People are confused. So usually you will see price is taking a lot of time, and we end up in a chop and less volume. And same thing, like when very little time, a huge volume is coming in, like more and more people are interested. Like price is trying to do something. People are trying to make market move somewhere else. So that's where like in less time, more volume comes. Whenever you see a breakout or like a rejection, these things happen. So this is it. Like in this case, you can do the tape reading, which I do all the time. So I will be covering that tape reading, a wider topic in later part of this course. So let's take some real life examples. This will clarify every doubt you have regarding volume. Okay. So let's consider this thickness as the friction. Like you need a car, like let's take an example of a car. So we are driving. So let's just say, and let's consider volume as the fuel. Like volume is what makes the market move up and down. So let's take volume as the fuel. Let's consider volume as the fuel. In this case, all three cars have the same amount of fuel and all are moving like, let's say 1 hour time. So like less friction, car travels from point A to point B. No problem, less friction. Let's increase the friction on the road. Car travels from point A to point C. Like it has traveled less because the friction has increased. So let's increase the friction more so the car has traveled even lesser amount of distance. Let's call it price. So you can see same happens with the candlesticks too. The less amount of friction, less amount of resistance, price will easily move from point A to point B. But if the resistance is higher, so it will move lesser, and if the resistance is even more, the price will less even less. So time and volume are constant. The fuel is same. The time given is same. So yeah. So that's one case. This is what you can do in like reading the CVD or like the absorption thing. Let's see what happens. So yeah, same volume, same time. You can see a lot of expansion happen. This shows like there's a lack of resistance. And here like same volume, same time, and we have expanded less. So that shows like there's some sort of absorption or there's some sort of resistance. Usually you can here at this point, so you can look for reversals or that sort of things. This is how, like, yeah, it's not a strategy, but you get the idea like where it is coming from. So what's the basic core principle of like why look for absorption before reversal? So this is the idea of it. It's not the exact strategy, but yeah, but the idea is the same. So yeah, this shows absorption, distribution of constant. Okay. Sudden rise and then sudden pause versus slow grind. Yeah, okay. So same thing, like I mentioned, slow grind or like sudden rise then sudden pause is like you hit a brick wall, something absorption, that sort of things. So in this case, let's keep the price and volume as constant. So okay. Okay. So yep. Yeah, we have like price and volume is constant. So we have traveled the same distance and the fuel is same, but time taken is different. So let's just say we move from point A to point B in 15 minutes because there was like no resistance until the very end. On the end of the period, we saw a lot of absorption and yeah, so all the fuel was consumed over here. And in the case 2, like we went from point A to point B in 30 minutes because we have some obstacles over here, some obstacles over here, some here. And by the end, like the whole absorption happened, and then the resistance was huge. And we took 30 minutes because of these obstacles before it. Likewise, from point A to point B, there were like constant resistances everywhere. So we took 1 hour time to reach there. Usually, you can see this kind of scenarios in the trending market. So idea is like, in let's just say in terms of price. So let's discuss what we can expect on the charts. So same volume, same time, so not time, price and distance. We expanded from point A to point B with a constant resistance, and we moved this amount of distance. But in other case, we move from point A to point B, but yeah, there is sudden absorption over here, and now we can look for reversals. So that's the idea, like where you can see the resistance, constant resistance, it usually shows a trend, and suddenly there's a huge resistance, that's where you expect a reversal. You can usually see how and what it means on like in the real life example of this car. Okay, and this is very interesting, and this is something you have to learn on your own, but I will explain the core principle behind it. So in this case, we will make price and time constant. The fuel, or let's just say the volume is like independent, like unlimited. But yeah, okay, let's take the example first. We have to travel from point A to point B, and there are 2 petrol pumps. As I said, volume is fuel. So are we refueling at some points on the graph or the charts or on the way in the car example? Let's just say the time is 1 hour. So in 1 hour, a car travels from point A to point B, and there are 2 petrol pumps on the road. So every petrol pump takes 5 minutes, 5 minutes over here, 5 minutes over here. So in case 2, we travel from this point to this point, but there's 1 petrol pump that takes around 20 minutes because of traffic and all the stuff, or the rush hours. So it takes 20 minutes. And in the case 3rd, we travel from this point to this point. It's even lesser because there's a petrol pump that takes around 30 minutes. So we did 1 hour. You can see like how fast the fuel is refueling. That increases how much price you travel. So 5 minutes it's getting refueled very quickly, and which is making us travel even further, and more time which is making us travel less, and this even more time which is making us travel even less. So this is very helpful when you read the tape, or you whatever you call like the book or orders or like tape. You can call anything, people call it by different names, but the idea is same. Is like how fast the refueling is happening, how fast the volume is backing up the move. So in this case, like yeah, a huge volume came quickly, The volume is coming but at a slower rate. Volume is coming at a slower rate. So this is what tape reading is. So the core principle behind tape reading is same. So yeah, these are some general principles of the tape reading. So increase volume during an advance with an inversive pause or inversing pause or setback occurring on light volume. It's the same idea. It's like if you are in a trend and like volume is suddenly increasing, let's just say upside, and there is a pullback like small volumes, it shows like lack of interest from sellers. So same thing which I explained here. Like resistance is getting lesser and lesser. Increase volume at top of the rally, like I mentioned, like at top of the rally, if there's a lot of volume, and in this case, like at the end of the destination or like towards the end of the journey, you're seeing a lot of increase in volume, or like a lot of increase in the consumption of the fuel. You see the volume, the trend is about to end. So yeah, tired or struggling in advance, same thing. Slowly we are grinding. Same thing which I explained over here. Yeah, slowly, like use resistance and not moving much. So same idea. So all these 3 examples, the very core principles of how to read volume and tape, I explained it with the proper examples, real life examples, which is easy to understand. So let's get into some charts so I can explain it even further. Relative volume, and volume should always be read in relative. There's no absolution of how much volume is average and all that stuff. One can try to calculate it, but eventually the events occurring or the say on the time of the day, it varies a lot, and new participation or old participation, it affects the volume a lot. So always look for volume in relative terms. What's happening in last few hours or last few days, you have to look at it in relative terms. There's no absolution like 1 million volume is good and like 500k volume is bad. So there's nothing of that sort. You have to always look in relative terms. So let's get to the charts. So yeah, I will. Okay, so this is my normal chart. I'm taking example of Nifty over here. So first thing you notice here, like I have like two indicators, like actually four, but those are like just volume profile thing, and this one is the day marker, like it splits the day, and this is volume suits and volume density. I will explain it as we go forward. So you can see this colored volume bars or like colorful candles. This shows the volume difference. This is volume suits by Leviathan. I would suggest get this indicator. This helps a lot in reading the volume. So in display, you can just select volume or relative volume, whichever you prefer, or like volume delta. I prefer relative volume. It depends on like what I'm trying to look on that day. So mostly usually is volume delta or like relative volume. So these are the settings I came up with. You can change according to your understanding of the market which you are trading, and at last you just need to turn on this like colorful candles. Everything, there's nothing more here. It's like relative, or you can z-score. It's up to you. It depends on your understanding. I keep it relative. So you can see like volume hikes and all that stuff. So you know where like volume is. Like I mentioned, towards the end of the trend, you will see a lot of volume. So you saw that here, like almost like flattened out. That's the thing. Here too, like if I have expected a reversal over here, or like we actually like reversed over here, this point. Same thing on such days, like we have like whole consolidation, full chop thing over here, like I mentioned. Like there's no back end of the volume thing, so you can see like almost flat volume. So these are the days we have to be very careful. Like there's a chop, there's nothing absolute, or like there's no directional bias from any participants. So this was a very complicated day. On trend days, same thing. Likewise, we have volume spikes toward a key level, and see what happened later. So this is one of the indicators I use on a daily basis. You can just minimize it here, so you have more free charts, free space on the chart, and it disappears like that. And this one is the volume density. Volume density is basically like where a huge volume is taking place and price isn't moving. Like I mentioned, how absorption works. So like volume is high and price is not expanding as much as it should be on an average. So same thing, it's not very useful on the Nifty charts because we have a huge volume towards the start of the day or close of the day. But in middle of the day, you can actually use it very effectively if it happens on BTC charts, BTC or ES or any 24 hours market. It was like super good. But when it comes to like sessional markets like 6 hours, like Nifty or like any traditional markets, we have some uncertainties. So like we have huge volume when we start and close of the day. So that's one complication with this thing. So, but the idea is same thing, which whatever I explained in the volume thing, everything revolves around volume density. So you just have to see where what activities are happening. So another thing I want to discuss it on order flow. Always use the color schemes. So these color schemes help you to see where huge volume is happening. You can see there's a yellowishness wherever there's a volume hike. And even if I zoom out, I can spot like where volume has taken place. You can see towards the top of the move, we have like huge volume. I don't even have to zoom out, but the yellow color indicates that we had a high volume. Even towards the low, it indicates we had a huge volume. So try to use these color schemes. This will help a lot. You can see there was a huge volume, and eventually we moved out. So it's not a strategy, but you have to be aware, like where the volume or where the activities are taking place. Likewise, you can see there's a volume hike over here, and after that we expanded. It's not a strategy, I repeat, but this you get the idea, like where the activities are happening, wherever there's a hike in volume density or wherever the more volume is happening, that's where trap traders or like the breakouts will happen. Without volume, there's nothing in the market. One has to read volume, and on low volume, I tend to sit out unless there's a volume hike, and it's relative. There's no like 100k or 80k. I always tend to look at, even like here it's not 100k, but there was a good volume hike. You see 94k, and sometimes we have like this streak of 36. So even 70k volume is good. So you can see. So like if you have a doubt or like something like what's the number we should be using for volume or delta, no, it's always relative. You always have to look in terms of relativity. So yeah, I hope everything one needs to know about volume analysis before the start is clear. So we will build on this for the strategies in the later part of the course. Try to experiment or like try to create your own logics in your own ways, your own understanding, so you don't hesitate or get confused by reading the volume in the live market. If you like the video, do like, share and subscribe. Until then, see you in the next video. Well, also join my Telegram channel where I post my journal or like the trades which I take or like some props which I make to understand things. So the link will be in the comments or like the description. So yeah, see you in the next video.